Hello, everyone, and welcome back to Market Talk number 4, where we kind of talk about what we're seeing in the market in regards to real estate transactions, mortgage rates, and everything in between that is affecting the real estate transaction in today's market. So again, as usual, our usual guest, Joe Valente from Tabatchouk Law, and Robert Snyder from Silex Financial. Thank you, gentlemen, for getting together again today and taking some time to talk.
Thanks, Jay.
So gentlemen, we are, I look back to what we talked about last month to this month and kind of see what has changed. And are there any major talking points? And I know that, obviously last month, we talked about obviously inventory. Inventory hasn't really changed, especially in the Northeast. It's still extremely low, and appreciation rates on homes, depending on the area, are still going up. Still seeing 18 to 20 offers on some properties, going 50 to $100,000 over asking in depending on the price points in areas. The $300,000 to $400,000 price range is on fire, like especially in New Jersey and Pennsylvania and New York as well. So I mean, but from the last time we talked to now, Bob, you've seen interest rates have hiked up. Can you give us a little reason why, or what you're seeing in regards to rates right now?
Yeah, so rates have been on a steady incline, and we're topping out in the low sevens as of last week. All about inflation and the Fed continuing to raise rates. The expectation throughout the year was that they were going to keep their foot on the pedal and raise rates, and so the markets were not very happy about that, and rates just continued to climb until, as we were just discussing, the whole bank issue last week.
Mm-hmm.
And that has changed the opinion of the public and of the investors out there and the markets, and everybody thinks that that is going to be has caused the Fed to rethink what's going to happen the rest of the year, and rates have come down over the last couple of days.
Right.
So we're back down into the mid sixes somewhere.
Okay. So Bob, what are you hearing from some of your clients of, the interest rates going up as high as they are now and then coming back down, and just the volatility of, where things are? What is the number one narrative of why your clients are still proceeding with purchasing, and why do you think there's such a demand to continue purchasing at rates this high?
I mean, look, it's no cheaper to rent. Rents have gone through the roof. Finding a place in New Jersey to rent is difficult. Most people believe that, although I won't allow them to go into the purchase with this in mind, they believe that at some point they'll be able to refinance anyway. The values keep going up, so what are they waiting for?
Mm-hmm.
So if the values are going to continue to grow, why wait till next year? I mean, rates aren't the big issue. They could always refinance down the road if rates come down.
Right. So in essence, they're not buying to sell the property in the year. They're willing to buy now, bite the bullet, ride out the storm, refinance potentially, and then bank on the equity of the appreciation of the property over the time.
Yeah. I mean, at a certain point, so a lot of these people have been looking for over a year. I'm sure you know some clients who've been looking for over a year. So do you give up?
Some have, some have not, not only because the rates have jumped so quickly that, it's kind of forced them out of the game. Not that they don't want to purchase, but it just financially, it's made it difficult for them.
But those are the people I feel worse for. Those people that would typically be that $300,000-$400,000 price range. First of all, not much there anymore.
Yep.
And you can't get into a low-end house for a reasonable monthly payment, especially New Jersey. When you add in the property taxes, forget it.
Right. But even people in higher price points, and even in the sevens and eights, like, Um, they want to be in certain neighborhoods and have a certain house, but they're in that price bracket. They're only allowed to put 10% down. And when you're going up against 30 other offers that are doing 20% down, waiving
Yeah.
appraisals, doing appraisal gaps, like, yeah, it really depends on, where you want to be and how much you have down and how much leverage you have to play in that price pocket.
So I'm constantly sending out pre-approval letters right now, left
Yeah.
and right. Very few contracts coming in.
Yeah. So, I mean,
Impressive.
if we break it down to the simplest terms, it's just basically inventory and rates. Those are the two talking factors and driving factors of what's going on in today's market. Joe, what are, even, you operate in, New Jersey and in New York, with the banks doing what they're doing and it's all over the place, what are you seeing in both states?
Yeah, I mean, the bank news definitely affected the New York City market kind of instantaneously, just in terms of, okay, like, attorneys that have escrow accounts with these banks. In some cases, they were putting temporary holds on these. They was holding up closings. There was a lot of panic in that regard. I think, that's more of a short-term thing in that respect. Bob hit the kind of the nail on the head for like the longer term impact, maybe on the mortgage industry, where this may turn into a good thing for rates, that it may halt the rising of rates and kind of keep them constant, maybe even drop them a little bit from where they are for the next 6 months. But I think that's like the far impacting scope of what happened. The Fed's got to step in and be like, okay, like this is not the time to keep our original plan of hiking the rates up. It's under this type of climate, it's not going to work.
Right.
So I think the long term effect on the mortgage side of things, as Bob expounded upon, is accurate. But like the immediate impact, yeah, people are concerned. I mean, people. First Republic's a big player in the New York City lending industry, and people that have loans that are ready to close in a week or two, they're concerned. I'm getting a lot of calls for sure.
I'm sure. Um, what's interesting is that by just what has occurred over the last few months is that right now interest rates don't even matter. Like it doesn't. It's not stopping anything. The only thing that's going to stop or change the equation is inventory right
Lack
now.
of availability, right?
That is
That's
it. Which is mind blowing to me. You would think that such a huge spike over a short period of time would really start to pump the brakes on this madness that we're seeing, but it's not. It's a true inventory thing.
we
Um,
are the market that we have right now in New Jersey is almost impossible to explain in like one sentence, right? It doesn't make much sense.
it doesn't.
Um, Usually with a slower market with less transactions, you can point your finger and make sense of it. But like you said, it's really inventory here. Like
Yeah.
interest rates are a non-issue anymore. Clients are, whether they're over it or whether whatever the explanation is, it's truly, if there's houses available, there will be offers on them.
Yeah.
Especially in the right areas, there'll be a lot more offers on them.
Yep.
So that's really
Read
it.
an article the other day that, and this is also what hurts inventory, is the people with rates, threes and these amazing rates, they don't want to sell their houses, and if they're going to move, they're using them as rentals now because they don't want to give up that amazing rate they have. So instead of selling, if they can financially afford it, they're keeping the other house to rent and buying something new.
Yep. 100%. I mean,
Yeah.
I'm in that situation, right now. Contemplating on what we're going to do. But I mean, our rate is so good that yeah, it makes sense. And then sometimes I wonder if the rates in, Bob, correct me if I'm wrong, or say, I would love your input on this. Are the rates at what they're at now going to slow people down from pulling money out of their house to rehab it?
I think that I've had these conversations, and for rehab, what people are doing is they're turning to home equity loans because they don't want to give up their rate. Sometimes it even makes sense, depending on how much money they need, to give up their rate because the blended rate would be better. But people are, love that number, 3%. And I don't blame them. I get it. So they're turning to home equity loans, which right now are very high, because really, when you hear about the Fed changing rates, yeah, that's what directly affected those home equity loans. They are adjustable rates. They are based on what the Fed's doing, but eventually those are going to come down too. So that's where people will do. There's enough equity in the house to get a home equity loan, and they're using those funds to do the work.
Yeah.
With the self-funding.
So it's interesting because, like we said, buyers don't necessarily, that's not what's preventing the market from having more transactions or flooded with more transactions. It's not the current interest rates, but everything's circular with mortgage rates, right? Like Bob explained it best. Inventory is low because sellers don't want to sell their low rates, and rates are higher. So that's even more of a reason they want to sell their low rates to get into a higher rate. So it really does circle back to the mortgages. Even if it's not directly the answer, it's really the answer.
It is, because the rates are keeping people in their houses. And that is our low inventory issue. It's
probably the single best explanation for the inventory.
I would agree.
Because we have two people on this call, I don't know about Bob's situation, that are not selling their homes. Me and you stated because of the low rate that I have on the home. I mean, it's tough to justify.
Yeah. So
there are people who are busting at the seams. They have no room left because their original plan was to, grow into a bigger house, and they don't want to move because of the 3% rate. I mean, that's.
Yeah. Should we all buy stock in Airbnb? Is what you're saying? But Bob,
you weigh all these factors, and sorry to cut you off, Jay, but
no.
You weigh all these factors, right? And they're accurate, but I think ultimately, what's going to affect the movement. I think ultimately, like Bob said, it's still better than renting. Sellers may be in situations where they can't be picky and they have to move. So, things always get shaken up. It's just a matter of how long is it going to take for that to happen? That's kind of the $1 million question.
Yeah. How long does this go on?
Right.
And the prices increase, or the value of the properties start to increase enough to where there's enough equity in the house to have it make sense for a seller to say, okay, we have enough in the house, even though we're going to get a hit with a higher rate, there's enough money that we can put down on the next house because we can pull the equity from this property and purchase that. I don't know what
not every seller has enough money for owning two homes, right? Like there's a lot of different answers into this.
Yeah. And that's the thing, it's a case by case basis, because obviously it's, humans, right? No one's the same. The situation is never the same.
I think we're in this kind of a market for a long time, unless we get something we don't know, the unknown, like COVID, right? Like, no one could have predicted that.
Nobody.
It could take something that was that unpredictable to change this type of a market.
Yeah, and if you also think about it, it's like when COVID did hit, it almost it hit a pause button on everything. And it could have gone the exact opposite direction, right?
Yeah.
It was teetering whether or not home values and everything was just going to crash and it was just going to be done, but all of a sudden it was just like, we're heading in, we're going right up, it's just like, but I don't think anyone really knew, like, hey, on the way out of this, the market is going to go crazy. I don't think anyone could have predicted that.
No, I memean, there's always that lingering question, like, things were so hot, and when things are so hot, there's never a great ending to it. That's the nature of things. But yeah, I don't think anybody could have predicted the lack of inventory issue. I mean, that was hard to predict.
Yeah, it's crazy. I wish we had some amazing good news for our audience, that we see a light at the end of the tunnel, but I think we're still going to have to ride this out for a little bit, and as new events develop, we'll obviously keep them informed about the situation. But like I said before, it is a case by case basis on what the individual or client has going on in their lives right now, and being strategic about it, and making sure that they know what field they're playing on right now. It is key. Do you guys
is
Good.
to convince more people to move to Florida. Sell their homes here, move to Florida, and
Yeah.
then they'll have more inventory here.
You know,
They pay top dollar here, they buy something cheaper down there.
yeah. That sounds like a great idea, Bob. And I did follow your I did take that angle a couple months ago. But at the same thing, the Florida market is ridiculous as well.
That market's tough too.
Yeah.
It is a tough market. And then I mean we're gonna kind of go down the rabbit hole, but like HOAs, man, they're another monster of their own, especially when you get down there in Florida and there's the hurricanes and there's stuff that we're dealing with now, but it's yeah.
It's interesting though. Like one thing I can say, we joke about the Florida thing, but the average age of the seller that I am dealing with, whether it's I'm representing them or they're on the other side of the deal, it's the average age is just high. So like these homes that are being sold is seeing the demographic of a person that is relocating to a different area. That's really the only way these deals are happening, to be honest. From when the market picked up post-COVID, a few months after the beginning of COVID, for the next 2 years, you saw a ton of sell and buy transactions, whereas two going on. You don't see that right now. There's none of that going on. I had none of those. I had like
sell and out.
So that's like, that's the model. You're selling, you're moving else. You're out of New Jersey to an area, whether it's the south or somewhere else. So
yeah. So are we all moving right now? Are we guys? Where are we going?
I don't know.
I don't know. It's tough.
I mean, I'll say, the deal flow from the last month went up a little bit, but like Bob said, nothing significant to really highlight. I think it's just maybe inventory went up slightly, but nothing negligible where it's not even a real talking point, to be honest.
Yeah. And honestly, if you have any inkling of selling your property now, it is the time. Like holy cow.
Especially if you don't get right, especially if you're leaving, right? That makes sense. I saw it this weekend. There was a house on my block and there was just insane amounts of traffic. I think they got 42 offers on the first week it was on the market. It's insane.
I believe it. I mean, I'm hearing rumors that there was a couple open houses that I heard of that 100 groups came through.
Yeah.
100 groups.
So yeah, if you are a seller, it is the time to sell for sure. Probably even better than the crazy bidding wars that were happening a year and a half and 2 years ago.
I agree.
I get the stats. I'm always entertained by the stats. So the offer goes in. A couple of days later, the realtor gives me the stats back. 35 offers, 12 over ask. We were 15th out of 35.
So you're saying there's a chance.
It's funny, right? Like I get those every week. We were 21st out of 25.
Yeah. I mean, crazy. List price is the starting price, and you better be able to come to the table with the appraisal gap and waive certain things, and to even be in the same room as a decision maker at that time. It's still crazy. And hopefully we get somehow it bounces out a little bit and we get a little bit normal market. I mean, obviously nothing lasts forever, but how long until then? So
then we'll be talking about a different abnormal market.
Yeah, of course, man. Of course. Anything else you guys would like to add?
I think that for the buyers out there, you just got to keep your heads up and keep positive. It'll happen.
Yeah, it will happen eventually. Eventually you'll go from 30 something to first, and you'll get the house.
Yeah,
you'll get the house. But thank you everybody for tuning in, and we look forward to seeing everybody on next month's Market Talk. Gentlemen, like always, it is always a pleasure. I appreciate it.
Thanks for having us. Appreciate it.
Yeah, appreciate it, Jay. Let's see what unknown factors will be in play a month from now.
Sounds good. All right, guys. Thanks.
Thanks.